Right. So there is a moment, and I think most people have had it, where you see your pay slip or your salary goes into your account, and for about half a second, you feel genuinely quite flush. Like, yes, that is a number. I am a person with a number. And then you do the mental arithmetic, which takes roughly 4 seconds, and suddenly that number is just smaller. Not dramatically smaller, just smaller in the way that soup is always slightly disappointing. You thought it would be more filling than it is. I remember when I got my first proper pay rise. Proper, like not a cost of living thing they gave everyone and called generous. An actual, negotiated, merit-based pay rise. I was quietly delighted. Told my wife, she was happy. We went out for dinner to celebrate, which in hindsight was perhaps not the most financially disciplined thing to do in the circumstances, but there we were. And then the first payslip came in with the new figure on it, and I sat at the kitchen table, looked at what had actually landed in the account and thought, right, so it's not quite that then, is it? Tax, national insurance, pension contribution. Suddenly, my brilliant pay rise had the structural integrity of a wet biscuit. Still worth having, still better than not having it, but the headline number, that shiny number I had been repeating to myself quietly in the car on the drive home from the negotiation, that number does not exist. It is a fiction, a very popular fiction, that an enormous number of people are organising their entire financial expectations around. And the thing is, you would think we would just, at some point, update our sense of what we actually earn. But most people never quite do. They keep reaching for the headline number in their head and then quietly wondering why things feel tight. I was doing it for years, standing in a supermarket car park checking my banking app with the faint expression of a man who suspects he has been personally swindled. Which brings me to the other side of it, because it is not just about what you take home. It is about what things actually cost when you look at them properly. And I do not mean reading the label. I mean the whole cost, the real cost, the cost that includes everything that comes after. I bought a car once. Well, I say bought. What I mean is I stood in a showroom on a Saturday afternoon feeling quite good about myself because the salesman had just made me a coffee in a proper mug, which I realise now is basically all it takes to get me to make a large financial decision. The car was lovely. I did not need it to be that lovely. I needed a car that went from A to B without leaving me stranded on the M6. What I got was a car that was significantly nicer than that, with monthly payments that I mentally described as manageable, and my wife described as a lot. And she was right, which she usually is. Because what I had bought was not just a car. I had bought the monthly payments, and the higher insurance, and the slightly sick feeling every time someone parked too close to it in a Tesco car park, and the 3 separate anxious conversations about whether we could afford a holiday that year. None of that was on the brochure. None of that was in the showroom with the nice coffee, but all of it came home with the car. This is the thing nobody talks about when they talk about money, not the price. The purchase price is almost the least interesting number in the whole transaction. It is the ongoing cost. The maintenance, the insurance, the emotional overhead. That last one is real, by the way. Some purchases carry weight that has nothing to do with what they cost financially. Some things you own, and some things own you a little bit. And you only find out which is which about 6 months in, when the novelty is worn off, but the bill has not. I had a colleague once, decent bloke, who kept upgrading his kitchen. Genuinely lovely kitchen by the end of it. One of those kitchens you see in magazines. Island. Built-in everything. Costs an absolute fortune. And one afternoon, we were all in the office, and someone asked him if he fancied going in on a 5-a-side pitch. Just a bit of fun after work. And he said he could not because he was picking up extra hours at weekends for the foreseeable. And I thought, right, so the kitchen owns him now. He is working Saturdays, so the kitchen can exist. He bought stress and called it an upgrade. And I am not laughing at him. I have done the same in different shapes. I think most people have. You reach for something because it signals something about how well you are doing, how far you have come, and then you spend the next 18 months being too busy repaying it to actually enjoy it. The thing about status purchases, and I include in that not just flashy things, but just generally spending money to feel like you have arrived somewhere, is that they stop working very quickly. Not the payments, the feeling. The feeling fades in weeks sometimes, days. You get used to things with an almost disturbing efficiency. The new car is just your car. The kitchen is just where you make toast. And the upgraded version of your life that you were imagining, the one where everything felt a bit more sorted and comfortable, turns out to require the next purchase to feel real. It is a treadmill. Very shiny, very expensive treadmill. And I say that as a man who genuinely believed for several years in his 30s that buying a good coffee machine would fix something in him. It did not fix anything. It made good coffee, which is great, but I did not need to finance it. What I wish I had understood earlier, properly understood rather than just heard someone say once, is that financial breathing room is not boring. It does not feel boring when you have it. It feels like being able to sleep. It feels like seeing a bill arrive and opening it without that little spike of dread. It feels like your wife suggests a weekend away and you say yes without doing 4 days of mental arithmetic first. That is what money is actually for. Not the stuff. The room. The space between what comes in and what absolutely has to go out. The bit where you can breathe without asking permission from a direct debit. And here is the thing. That breathing room does not require a particularly exceptional income. It requires a particular relationship with what you already earn, which is, frustratingly, not about grand gestures, not about one big decision. It is just about dozens of small ones made consistently over a long time without anyone applauding you for it. Which is exactly why it is so hard and so unsexy, and why most people, myself included for longer than I should admit, do not do it. If any of this is landing somewhere useful, subscribe so you do not miss the next one. I am trying to say the things I wish someone had said to me about 15 years ago, before I bought the car and the coffee machine and the general feeling that things were under control when they really were not. Because here is the thing about good habits with money. They compound. Same as bad ones, unfortunately, but in the other direction. Every time you do not buy the thing you cannot really afford, you are not just saving whatever that thing costs. You are keeping the future version of yourself slightly freer, slightly less indebted to past decisions. And the version of yourself who has a bit less debt and a bit more room to breathe, that person makes better decisions. They take better jobs because they do not desperately need the first offer. They weather emergencies better. They sleep better. They are more patient. They are, genuinely, more fun to be around. I know that sounds like a stretch, but I have noticed it. I have noticed the difference between the version of me who was quietly panicking about money and the version who has a bit of room. And they are genuinely different people. Same face, vastly different levels of low-grade background anxiety. And I am telling my boys this not because I want them to be miserly or joyless or sit in a cold flat counting coins. I am telling them because I want them to actually enjoy their lives. I want them to say yes to things because they want to, not no to things because they have to. I want them to own their stuff, not be owned by it. I want them to earn a number, look at what actually arrives in their account, and not feel like they have somehow already lost before the month has started. Because the headline number is a fiction, and the real number is smaller than you think. But it is enough if you are careful with it. It is genuinely enough. And being the sort of person who knows that, who actually lives by that, is worth more than any kitchen.